Holy smokers, guys, what a rough day it is out there in the stock market today. Wall Street is not having a good day. So I want to take you through first like the carnage, like how bad are things out there today. I want to take you through the markets. I want to take you through a ton of different stocks that I personally own or I track heavily. We're going to look at some of the biggest companies, how much some of these stocks are down today. It's unbelievable out there, guys. And then I kind of want to go into 3 points. I want to make 3 points on kind of like where my head is at right now. Like what I'm thinking about and just kind of give you my viewpoints there, which I think everybody's very interested to hear about. So first off, it was carnage on Wall Street. Now this wasn't even before the end of the day. All these screenshots were taken with still about an hour left in the market trading day, and from my understanding it has gotten worse. But needless to say, the Dow's down 500 plus points, S&P's down over 2%, NASDAQ was down about 3% today. As far as some stocks I own that took big hits, Facebook down around 3% today, Alibaba was down 5% today, US Steel down 3.5% today, Skyworks Solutions down 3% today, Apple was down nearly 3% today, okay? Some bad days for stocks I own. Now stocks I track, let's look at some of these stocks. Tesla was down over 2%, Stitch Fix is down over 4%. I've been looking into that company heavily lately. That stock's down about 50+% in just the past week or so. So I've been kind of looking into that one. We have Switch down nearly 6%. That's now $8.88 a stock now at this point. Starbucks down over 2% there. We have FedEx down over 2.5%. We have eBay down nearly 4% today. JD.com cannot get a break. That stock is down nearly another 4% today. It's crashing through its 52-week low day after day. Skechers, which is a shoe company, that one's down nearly 5% today. We had Dave & Buster's down 3.5% today. Intuit, the ones that make TurboTax and some of those products, QuickBooks, that stock was down over 6% today. Disney down over 2% today. Google McDougal down over 3% today. We had Michael Kors down over 6% today. Big downward move from Michael Kors there. Align Technology, which makes the invisible braces and things like that. This one was down over around 6% today. Roku was down over 11% today. Mind you, none of these companies reported earnings. They're just all down massively. Nvidia was down over 5.5% and might have ended up down more than 6%, with what happened at the rest of the trading day. We had Snapchat down 5.5% today. We had Marvel Technologies down nearly 6% today. Transcentrix down over 7% today. Maxim Technology down 6.5% today. Chipotle down over 2% today. Shopify down 6% today. Ambarella down over 5% today. iRobot down about 6% today. Groupon down 6% today. Qualcomm, one of the biggest semiconductor companies in the world, down over 3.5% today. Amazingzon down around 5% today. AMD down over 7% today. Textron down over 3% today. My goodness, guys, it's ugly out there. Zillow down around 3% today. Ferrari down over 8% today. Oh my goodness, guys. Square down nearly 10% today. Twitter down over 7% today. Activision Blizzard, a huge video game maker out there, down over 4.5% today. Shake Shack down 7+%. Caterpillar down 3+%. Netflix down around 7% today. It was a bad day in the stock market, to say the least. Okay, guys, it was a bad day to say the least in the stock market. So there are 3 things I want to go over with you, kind of in this video around where my head is at. And so let's just get into these. All right, guys, the first thing I want to talk about here is, it was a few weeks ago I made a video on this channel. It said something like the stock market is lying. And what I talked about in that video is I talked about how the indexes looked so high, near like all-time highs, but how tons of industries and tons of stocks were actually near their 52-week lows. So it wasn't like everything is so grand. Sometimes, everything is so grand in the stock market and almost all stocks are near their 52-week highs. Maybe you have a few exceptions here and there that are down, but almost all stocks are just doing great, okay? This is not one of those particular times. The indexes look so high, but when I look at industry after industry, if I look at stock after stock, what I find is stocks that are massively off their 52-week highs. What I see is tons of stocks that have crashed through their 52-week lows. I'm talking about a ton of semiconductor stocks. If you look at a massive amount of semiconductor stocks, you will see a lot of stocks that are near their 52-week lows or at their 52-week lows. If you talk about the home builders, you're going to see a ton of stocks. Almost every single stock out there is at their 52-week low or very close to their 52-week low, all right? If you look at stocks like even some of the high flyers like a Tesla, a Facebook, a Netflix, those stocks have been absolutely damaged in a massive, massive way, guys. You can go industry by industry and you will find a ton of industries that their stocks are near their 52-week lows or have crashed through them, guys. It's not like it's just a few random stocks here. It's a massive amount of stocks. The stock market has looked so much better. The indexes have looked so much higher because of 3 companies in particular that have huge weights on that stock market, have performed very well, and it's made the stock market in general look like it's at some really high level, when really you break it down and you start looking at things and it's like things aren't as good as the stock market says, at least as far as stock performance is out there. It's been Apple, it's been Google, and it's been Amazon. Those 3 stocks right now have helped the stock markets outperform and look like they're so high because those stocks have so much weight. We're talking about Apple's over $1 trillion market cap, Amazon's around $1 trillion market cap, and Google's like a $700-800 billion plus market cap. So those 3 companies have massive weights on the stock market, and they make just the stock market look so much better than it really is, guys. Take a look at all the Chinese stocks. That's another industry. Almost every single Chinese stock out there right now is at its 52-week low or has crashed through its 52-week low. Okay, that's another massive industry of stocks. So it's not like we're in some grand times as far as the stock market goes right now. If you're just looking at what the Dow says, if you're just looking at what the S&P 500 says, if you're just looking at what the NASDAQ index says, it looks like, wow, things are really great. And then when you break it down, you start looking at individual stocks, individual industries, you're going to find a massive amount of industries are not at their 52-week highs or anywhere remotely close to that, okay? So the stock market has been lying, as I said, and it continues to be true, and I saw a ton of stocks out there and a ton of industries continue to get killed. So I don't believe in this notion that, oh man, we're up so high on the stock market. No, not when you break it down and you actually look at some of these stocks. We're actually not in a good place as far as stock performance for a ton of industries, all right? Let's get into point number 2. The second point I want to bring out is keep in mind that the stock market and stocks in general, over the long term, it's only about what is going on with underlying businesses. Some people like to point out interest rates or this or that, and all those type of things have small impacts on the stock market in the short term, okay? In the short term, all those things have impacts on the stock market. But if you go back to 2008, 2009, right? Interest rates were at 0, and you couldn't find a person to buy stocks in 2008 or 2009. The stock markets were crashing. Well, I was probably the only person actually buying stocks out there, though I was buying my first stocks ever at that time, right? You couldn't find a person to buy stocks in 2008, 2009, and interest rates were at 0, okay? Why? Because underlying businesses were absolute garbage. No one wanted a piece of underlying businesses. Everybody's earnings were going down massively. Everybody's revenue was going down massively. And what ended up happening was companies started saying, hey, we're starting to see a bottom in this. And what ended up happening was stocks started to move back up, okay? They crashed. I think the Dow was down to 6,700 or something like that. It was ugly. It was an ugly situation. And then all of a sudden, this company said, okay, we're starting to see a bottom around here, and all of a sudden stocks started to move back up, okay? Interest rates were at 0 that entire time. You couldn't find people to want a stock, okay? So interest rates, those type of things, they absolutely do have some type of minor short-term effect, and anything can come out of anywhere. Any fear, it doesn't matter if it was North Korea at a time, or if it was, oh, we might have a double-dip recession, or this or that. There's a million different things that since I've been in the stock market for 10 years that have been, said out there, and get the stock market to move down in a big way or just decently in a short-term period. But over the long term, it's only about what companies are actually doing. So what we've had is last earnings season was amazing, okay? Companies reported phenomenal earnings, and most of those companies, unfortunately, the stock prices didn't move or didn't go up that much, all right? So this earnings season is about to kick off next week, okay? And then going from here, we're going to be in a massive earnings season. It's going to be very important to hear what companies' current numbers are and what their future guidance is, because those numbers are what's going to really dictate where stocks go over time, okay? Once again, anything can happen in the short term, anything can get to the stock market's attention, but over the long term, it's about what those underlying businesses are actually doing. What type of numbers are they reporting? A lot of people are worried about those Chinese tariffs maybe going to 25% here at the end of this year. What do companies have to say about that? How many businesses are going to be hurt from that? And if they are hurt from that, how much are they going to be hurt from that? And what about the businesses that are actually helped by that? Okay, I own a business that's going to be helped in probably a bigger way than anybody by these tariffs, and that's U.S. Steel. Okay, there's probably no one that benefits more than a company like a steel maker. All right, from all these tariffs. So the question is, how many companies is this hurting? How many companies is this helping? And then what's the effect on all this? Okay, are companies going to see their earnings go down massively? Not massively. What's the situation? It's all about companies' underlying business. We've got to pay attention to that in this earnings season and really see like where companies are at here. Okay, let's get into my last point number 3. My third point has to do with what happened to everybody's 5-year vision. Okay, when the stock market's going up, when any asset class is going up, all you hear is people talking about long-term visions and kind of looking at it and just excitement. All of a sudden, when things start to struggle, you get people that go into their shell like a turtle and kind of like, oh my gosh, everything's bad, and they only start looking at what's going on today. And my point is, what happens to your 5-year vision? Your 5-year vision should never go away. Regardless if you're in the best times ever, the worst times ever, if the stock market's shooting up and all the stocks are doing great and you're making money hand over fist, if you're losing money hand over fist, the vision should always be for the long term. You should always be in that 5-year vision regardless of what's going on out there. What has happened to everybody's 5-year vision? Everybody just gets so scared. They just get in their shells and they're like, start thinking about today. And I'm like, wait a minute. 6 months ago, everybody was thinking long term, and they were talking about all these long term, bullish theses on a ton of different businesses. And now all of a sudden the stock market struggles, industry struggle, and people go into a shell like a turtle, and all of a sudden it's all about what's going on today or something like that. People, you got to stay with a 5-year vision out there. Imagine where businesses are going over time. Okay, when I've been buying stocks like crazy for the last week or two. Okay, like I've been putting a lot of money in the stock market, a ridiculous amount. Okay, and the way I think about it is I'm thinking about like the 3-5-year visions on these companies. Where's Alibaba going to be over time? Where's Facebook going to be over time? Where's Apple going to be over time? Where's Skyworks Solution going to be over time? Cirrus Logic, where are these businesses going to be 3 years from now, 5 years from now? That's where I'm thinking, not where these stock prices are going to be tomorrow or something like that. I'm willing to bet against anybody can short sell any of my stocks, and I guarantee you over the next 3 to 5 years, you will lose a massive amount of money and I will make a massive amount of money. You can go ahead and short the S&P 500 or whatever you want to short for the next 5-10 years. I can almost guarantee you you're going to lose a massive amount of money if you stay short that. Maybe you can make a little money 1 week, 1 month or something like that. But if you stay short over the long term, it's like Warren Buffett says, you will get absolutely destroyed, okay? Warren Buffett, he's willing to bet any hedge fund manager out there that he will outperform, or the S&P 500 will outperform any hedge fund manager over time. There's a great video that went viral recently on YouTube about him exposing hedge funds, okay? You probably type in Warren Buffett exposes hedge funds if you want to watch that video. He exposes hedge funds and points out how poor their performance is because they're always trying to jump in and out of things. They're taking their massive commissions and whatnot, instead of just staying long term on things, instead of just focusing over the long term, buying businesses that are going to likely do great over the next 3, 5, 10 years. That's the name of the game, regardless if you're in the greatest economy, which our economy is extremely strong right now, whether you're in a weak economy, a decent economy, a stock market that's booming, a stock market that's not booming like it is right now. It doesn't matter. The vision should be on 5 years, guys. That's where it's at. Those are my points on this video. I hope you enjoyed this. Thank you for watching and have a great day.